Hi, this is Zak Mir with the Bulletin Board Heroes here at Vox Markets for Friday, the 1st of October. Starting off with cellular goods, where it's been a rather rocky ride, especially from the initial peaks that the shares had in the 20s. Spent the last, sort of 4 or 5 months trying to build a base, and it looks as though, if one is not tempting fate, that we're actually in a recovery mode. The first reason for saying that is that we've had lower prices here going into the end of September, but the RSI actually higher than the last higher lows back in May. The other thing, I suppose, to note is the way that we broke that line of resistance there from August after a sort of hammer candle just at the end of last month, and a vertical move since, which shows momentum is currently building. And we've also broken that line of resistance there from July at 7.1 pence, and above that, on an end of day close basis, we could hit that June resistance line as high as 9.7 pence, which seems to be rather ambitious, but that looks like a decent top of broadening triangle target, perhaps by the end of this month. Moving along to a stock which doesn't have much of a chart to look at, but has had a lot of activity and liquidity around it. Here we've got Caracal, which rather simply had a retracement back from 1.6 pence, or just above, retraced half the move roughly of the initial low that the stock had there at 0.87, and is back up again. Current situation is that it looks as though we're going to progress within a rising trend channel, which I'm just attempting to draw at the moment, running in a sort of line like this. So support there around the 1.2 pence level, and looking for the upper parallel there up towards the 2 pence area, perhaps by the end of this month. So guessing that the upper parallel there is up towards the 2 pence area at this stage. You see, it sort of fits well. In fact, it could be a bit wider than that, but let's be conservative in terms of the price action. But the upside valid there while we hold above the 1.3 pence area at the moment. Moving along to a stock which has had a rather torrid history in the recent past in terms of its share price, peaking over £1 back in March, which seems to be a long time ago. The only plus point, I suppose, at the moment is that the shares went up down to a very oversold level, sub 20 on the scale between 0 and 100. Haven't really been that low for quite some time, maybe back in the summer of 2020. So that's the last time we went down to those sorts of levels. So there could be a dead cat bounce on the cards for the shares, although at this stage, probably one wouldn't be looking for a greater bounce than the line that I'm currently going to draw, which is, I suppose, into the 24, 25 pence area, something like that, before the sellers come in again. But at the moment, just looking for a little bit of a bounce there for chill brands in the near term. On to Europa Metals, which delivered a very fine resource upgrade today. And here we see the shares gap off the lows. That's normally a decent sign for a stock or a market. Good bullish divergence there as well, with the lows that we had going into the end of last month. Current view is that above that line of resistance, that broken line of resistance at 7.9 pence, let's call it, the shares could at least hit the 10 pence area of the 200-day moving average. If you're a fan of the shares and think it's a big winner, then 18 pence, maybe on a 3 to 4 months view, could be possible if we can get sustained price action back above the 10 pence level. Stock which has been on the back foot, rather frustratingly for quite some time, is Empire Metals. Here it looks like we're just going to break this January resistance line. You could argue, I suppose, it's a little bit higher than where I've drawn it, but at the moment, clearing the 1.92 pence area in the 50-day moving average could then get the shares up to the 200-day moving average and old June resistance on the way down around 2.8. So above 1.8, looking for 2.8 at Empire Metals at the moment. Maybe that could be hit by the middle of November, 4 to 6 week view. One of the RNSs of the day has been N4 Pharma. And this looking quite decent. The reason for this looking particularly decent is we've had an island reversal. That's a gap down and then a gap up, which is a major charting plus point. The other point, I suppose, is it's been a bear trap island gap reversal, so actually breaking recent support around the 8 pence level. What we're looking for here is really sustained price action back above the bottom of the gap there at 8 pence, above 8 pence, looking for obviously 10 to 10.5 by the end of this month, and hopefully rather more. You can see that I've got the shares in a rising trend channel that's in place since the summer of 2020, but maybe that's a 3 to 4 month view at the current rate of progress. Onto a stock which has been moving vertically in the recent past, PipeHawk, and continues to do so. In fact, the reason for including it today is that the shares have managed to approach that rather ambitious looking line of resistance that I drew previously, up towards 17 pence. That's still the target that we've got here, and that could be seen hopefully over the next week or so. Upside valid while we hold above the last support there around 13. And if you're a fan of the shares and are dreaming of higher highs and greater achievement, then the line that I've just drawn there could be the next target for the stock. If we close above 17 on a sustained basis, then the next level up towards 23 at that July 2020 resistance line projection. But the upside valid while we're above 13 in any case after last month's golden cross between the 50 and 200-day moving averages. Bit of forensic charting here with Pires, which has announced some good news via its Pluto investment. Here it's interesting that we've had a narrow bear trap, i.e. just below the old support there that we had in August, so that was around the 7.05 level. We managed to go back below the 7 pence level for 2 or 3 days, but we flipped up quite nicely now. Also got the 50-day moving average rising, so that does suggest that above the 6.9 pence area we should at least see 8.5 or perhaps more, and ideally by the end of next month up towards the 200-day moving average rising at 10.5 pence. Be cautious on the stock, maybe wait for an end-of-day close above the 50-day line at 7.35. On to Scirocco, which has been in a recovery mode over the last couple of weeks, or at least the last week. Here we broke above the 50-day moving average at 0.9 pence, let's call it, and weekly close above the 200-day line at 1.02 could set the shares on the way towards 2 pence maybe by the end of next month if we get the kind of vertical push that we've had periodically in the stock. I think last October we'd obviously appreciate a move like the one we saw last October happening this October. Stock that just keeps on giving to the bulls is Thungela, and it's already just narrowly missed the target that I suggested at £5. Maybe we'll get that early next week. I thought I would just include the shares, not only to sort of cheer people up on a rather dull day, but also attempt to find the next level up, which I think could be towards that resistance line there, 650 or so, maybe by the end of the year. Upside valid currently while we hold above the £4.50 areas, above that, looking for £5 initially, and then obviously up towards the £6.50 area by the end of the year. Stock which was a gift on both a fundamental and technical basis recently has been Touchstone. Great news, and the shares held that the news announcement day and have actually now broken above the high of that day, which was around 113.5. While we're above that, looking for the stock to at least fill that gap towards £1.32 over the next couple of weeks. So looking pretty encouraging there at Touchstone at the moment. Finishing off with the stock which has become a bit of a uranium play, Thor mining. Gap through both the 50 and 200-day moving averages, which is very impressive after a bear trap from below the April and May support there around 0.7 pence or 0.72. Current view is that while we're above the 200-day line at 0.85, we're looking towards that broadening triangle top from November as high as 1.3 pence, perhaps by the end of next month. So looking pretty set fair for Thor at the moment. That's it for me today. More updates over the weekend.